Maagmagang ko na ako. Na-record mo na na. Okay. Good day. Now this time, we are going to continue with the solution of problem 14-29. This morning, in the afternoon, we were able to discuss the related adjusting and correcting entries for the items that are supposed to be adjusted because of the effects of the adjusting and the correcting entries. Now, it's mentioned that one of the reasons why we have to study this topic is that the objective is for us to be able to prepare the adjusting and correcting entries so as to shift from the cost basis to the accrual basis of accounting. So this morning, this afternoon also, we were able to prepare the adjusting and correcting entries in connection with the additional information numbers 1 to 10. Now, the second requirement of the problem is to prepare an income statement for the year ended December 31, 2020, and also to prepare a statement of financial position on December 31, 2020. Now let's start with the income statement for the year ended December 31, 2020. We begin from sales equals 4,090,000. And we have the cost of goods sold to be deducted. Inventory on January 1, 2020 for 150,000. And then we add purchases, 1,830,000, and so we get the total goods available for sale of 1,980,000. We deduct the inventory on December 31 for 210,000, giving the cost of sales equal to 1,770,000. And the amount is deducted from sales. So we have now the gross income amounting to 2,320. From the gross income, we are going to deduct the following. First, expenses of 1,530,000, the depreciation of equipment of 20,000, depreciation of the building for 300,000, doubtful accounts for 25,000, and the interest expense for 36,000. So from the gross income of 2,320,000, we deduct the expenses of 1,911,000, giving us the net income of 409,000. And take note that we are using the amounts after adjustments for the related correcting entries and adjusting entries that we prepared in relation to the additional information given, numbers 1 to 10. So take note, we are using the adjusted amounts. Then also, we are required for a statement of financial position. So for the assets, we have the current assets first. Cash is 1,500,000. Accounts receivable 250,000, less the allowance for doubtful accounts 25,000. The net realizable value of the accounts receivable is 225,000. advances to suppliers of 100,000, and merchandise inventory of 210,000, giving the total current assets of 2,035,000. Okay. Then we have the non-current assets beginning from land for the amount of 800,000, building for 1.5 million, less accumulated depreciation of 600,000. The carrying value of the building is 900,000. The furniture and equipment for 200,000, less accumulated depreciation of 30,000. The book value is 170,000. So for the non-current assets, we have the total of 1,870,000. So the total assets now is 3,905,000. That is the sum of the total current assets and the non-current assets. So total assets of 3,905,000. We go to the liabilities and equity. For the liabilities, the current liabilities are the following: accounts payable 280,000, accrued expenses of 100,000, accrued interest payable of 36,000, with a total for current liabilities of 416,000. The non-current liability in the form of mortgage payable for 900,000. So the total liabilities equals 1,316,000. For the equity section, we include share capital of 2 million and the retained earnings for the adjusted amount of 589,000. So we are using note number 1 for the retained earnings for 589,000. So the total of the equity is 2,589,000, so that the total liabilities and equity equals the total assets of 3,905,000. So for note number 1, for retained earnings, we are given the unadjusted balance of retained earnings in the trial balance. The credit balance is 600,000. Then we are going to reflect the following adjusting and correcting entries. We now have to add 200,000, deduct 40,000, deduct 350,000, deduct 70,000, add 150,000, deduct 10,000, and we have now the amount total of 180,000. That's now your corrected balance of retained earnings on January 1. So retained earnings balance after corrections and adjustments, January 1 balance is 180,000. Then to retained earnings, corrected amount, we add the net income as taken from the income statement. We have 409,000, giving us retained earnings of 589,000 from note number 1. Okay, so that's now our third requirement, which is the statement of financial position. Okay, now by the way, if you have any question, you just try to record them or take note, and on Thursday then you can ask the questions. I have already announced that I will give an exam on Friday. That's to cover chapters 14 and 15. That will be on Friday if we will have a class on Friday, considering that it's a red mark in the calendar. So if we will have a class, then I will give the test on Friday. If no class, then we move the exam to Monday. Saturday will be your time for the preparation of the project to be passed on August 6th. Okay, now let's continue with chapter 14 with the multiple choice problems before we move on to chapter 15. Okay, let's begin with 14-1. The question in 14-1 is, under cash basis, what amount should be reported as sales for the current year? When the company reported sales revenue of 4.6 million in the income statement for the year ended December 31, 2020. The entity wrote off uncollectible accounts totaling 50,000 during the current year. We are now given the balances of selected accounts in 2019 and 2020, including accounts receivable, allowance for uncollectible accounts, and advances from customers. So we will now compute for the amount of sales under cash basis. Our accounts receivable beginning or December 31, 2019 is 1 million. Then we add sales on the accrual basis for 4,600,000 and advances from customers in the amount of 300,000. That's for 2020. So the total is 5.9 million, and we deduct accounts receivable December 31, 2020 for 1.3 million, and we deduct write-off of related accounts, wrote off uncollectible accounts for 50,000, and advances from customers from the 2019 column of 200,000. So the total is 1,550,000, giving the difference of 4,350,000. That's now your sales under the cash basis of accounting. Okay, now in other words, we have cash basis as required. Okay, B as in boy. 14-2, the problem now is asking for if the entity desires to prepare a cash basis income statement, what amount should be reported as sales for the current year. So we now begin with accounts receivable December 31, 2019 for 400,000 and add credit sales amounting to 3 million. So the total of 3.4 million, we now deduct accounts receivable in December 31, 2020 for 485,000. So we now have the collections of 2,915,000, and we add back cash sales amounting to 200,000. So we have your cash basis amount of sales for 3,115,000. If you can recall the guideline given to us, how we compute for sales under the cash basis, then the guideline states that sales under the cash basis of accounting is the sum of cash sales and collections. So what we are doing now is working back in order to determine collections, though we are already given the amount of the cash sales. So we now get your sales under the cash basis. The answer is C. Number 3, the company provided the following information for the current year. We have cash sales of 2 million gross and we have returns and allowances. Then the credit sales gross and discounts. On January 1, customers owed 1 million. On December 31, they owed 750,000. The entity used the direct write-off method for bad debts. No bad debts were recorded in the current year. Under the cash basis, what amount of revenue should be reported for the current year? So we now begin with accounts receivable on January 1 for 1 million. Then we add the credit sales for 3 million. We now have the total of 4 million. Then we deduct the accounts receivable on December 31 for 750,000 and also deduct sales discounts of 150,000. The total deductions amounting to 900,000 deducted from 4 million. The difference is 3,100,000. The amount represents collections. And add the cash sales. Cash sales is 2 million minus the returns and allowances of 100,000. So our net cash sales is 1,900,000. Adding it to 3,100,000, the amount of revenue that should be reported for the current year under the cash basis is 5 million. So that is letter A. Next, in 14-4, the company began the current year with accounts receivable of 1 million and allowance for doubtful accounts of 50,000. During the current year, the following events occurred. Accounts written off, cash sales, sales on account, doubtful accounts expense recognized. At the end of the current year, the entity showed a balance in accounts receivable of 1,700,000. Under the cash basis, what amount should be reported as sales? So we now begin with accounts receivable on January 1 for 1 million. Then we add sales on account for 3 million. The total is 4 million. We deduct the accounts receivable end, that's 1.7 million, and deduct accounts written off for 100,000. So the difference is 4 million minus 1.8 million deductions. The difference is 2.2 million, representing collections of accounts receivable. And we add back cash sales for 500,000. The total sales under the cash basis of accounting is 2,700,000, and that is letter A for problem 14-4. In 14-5, question is, what was the amount of insurance premium paid in the current year? So this is with regards to an expense. What is the amount of insurance premium paid? So we have the charges to insurance expense during the year, including year-end adjustment of 25,000. So that's now the charge to insurance expense for 625,000. And we add prepaid insurance on December 31 of 175,000. and deduct the amount on January 1 of 150,000. So it gives us a difference of 650,000. That's now the amount of insurance premium paid in the current year. So letter D is in dog. Number 6, the company provided the following data for the current year for operating expenses, including depreciation, insurance, and salaries, for the total of 3,200,000. We are given the balances on December 31 and January 1 for prepaid insurance and accrued salaries payable. What amount was paid for operating expenses? So we have now your operating expenses per book. That's 3,200,000. Then we are going to deduct depreciation of 1 million because we do not pay for that. The problem is asking for operating expenses paid. So 3.2 million, we deduct depreciation of 1 million, and then prepaid insurance December 31 at 200,000 and deduct beginning of 150,000. Then accrued salaries payable of 100,000 at the end of the year, deduct and add 120,000 beginning amount. So the amount of cash paid for operating expenses is 2,270,000. I'll repeat, operating expenses per book 3,200,000, deduct depreciation of 1 million, add prepaid insurance and 200,000, deduct January 1 balance 150,000, then accrued salaries payable and deduct 100,000 and add January 1 balance 120,000. Letter answer is B as in boy. 14-7, the question is, what total amount of cash was received from rental in the current year? The entity provided the following additional information regarding rental income. The rental income for the current year using the accrual basis is 600,000 accrual. However, the problem is asking for the amount of cash received. So in other words, it's on cash basis. So we have the rental income using the accrual method of 600,000. Unearned rental income on January 1 is 50,000. We deduct. Unearned rental income January 1, 50,000 deduct. Unearned rental income December 31 add 75,000. Then accrued rental income on January 1 add, and accrued rental income on December 31 deduct 40,000. So the answer is 615,000. I'll repeat, 600,000 minus 50,000 plus 75,000 plus 30,000 and minus 40,000. So you have now your rental income based on the amount of rent received. So under the cash basis. Answer is B as in boy. 14-8. Under cash basis, what amount should be reported as purchases for the current year? So we have now the inventory beginning or as of January 1 given. So the amount of inventory beginning is 2,100,000. Your purchases is question mark, though it is on the accrual basis, but it's not given. So we have this as the balancing figure. The total goods available for sale is still not given. The inventory on December 31 is 2.5 million. Cost of goods sold is 5,300,000 given. 5,300,000 given. So we now get inventory December 31, 2,500,000. We can get the total goods available for sale by working back. So it gives us 7,800,000. And from this amount, we deduct the inventory on January 1 of 2,100,000, giving purchases on the accrual basis. So purchases is your balancing figure. So that's your squeeze figure. Okay? So that's now the amount of purchases under the accrual basis for 5,700,000. Now, as we continue, accounts payable on January 1 is 1,200,000. Then we add the amount of purchases on the accrual basis of 5,700,000. The total is 6,900,000. We deduct the accounts payable end of 1,350,000. We now have your balance of 5,550,000. That's the amount of cash paid to suppliers. So cash paid to suppliers for purchases for the current year. So we now have the amount under the cash basis. 5,550,000. The answer to number 8 is letter A. Next, we go to number 9. The problem is asking for what amount should be reported as capital under cash basis. So we have our capital balance beginning on February 1 for 200,000. We have the income for February and March in the amount of 500,000 cash basis income. So the total is 700,000. Then we deduct the withdrawals of 100,000. The difference is capital balance at the end. So 600,000. Letter C. Next, in 14-10, as stated, the company began operations on January 1, 2019 and elected to use the cash basis of accounting for tax purposes, but the accrual basis for financial statements. The entity reported sales of 1,750,000 and 800,000 in the tax returns for the years ended December 31, 2020 and 2019, respectively, and reported accounts receivable of 300,000 and 500,000 on December 31, 2020 and 2019, respectively. Under accrual basis, what amount should be reported as sales in the income statement for the year ended December 31, 2020? Now, for the accrual basis of accounting, we compute sales as the sum of cash sales and sales on account. So if your cash sales is given, but the sales on account is not, now you can compute for it. However, it will be easier if this figure is given. So we now have the sales equal to 1,750,000. We add the sales on account. Accounts receivable end is 300,000. So we now get the total of 2,050,000 deduct accounts receivable beginning of 500,000. So the difference now is your sales under the accrual basis for 1,550,000. So we now have letter B for the requirement. Okay, so we have problem 14-11. 14-11 question, under the accrual basis, what amount of income should be reported in the 2020 income statement? So the cost basis income for 2020 is 6 million. Okay, then we have accounts receivable beginning in the amount of how much? Or 2020 accounts receivable, that's ending of 4 million. Okay, 4 million. And the accounts payable beginning is 3 million. Okay, so the total is 7 million, and we have to add this to 6 million. So that makes a total of 13 million. But we deduct accounts payable end, that's the amount by 2020 year end, for 1.5 million, and accounts receivable beginning of 2 million. So the total is 3.5 million, giving us the income under the accrual basis of accounting in the amount of 9.5 million. So the answer to 14-11 is D as in dog. Next, number 12. The company reported the following balances at the end of each year. So the entity paid suppliers during the year ended December 31, 2020. Under accrual basis, what amount should be reported for cost of goods sold in 2020? Okay, first we have the accounts payable end of 750,000, payments to suppliers 4,900,000. The total is 5,650,000, and then we deduct accounts payable beginning of 500,000. The balance of 5,150,000 represents purchases. So we now add purchases of 5,150,000 to inventory on January 1 of 2,900,000. That gives us 8,050,000. Deduct inventory on December 31, 2020 for 2,600,000. The balance is cost of goods sold. So cost of goods sold is 5,450,000. That is under the accrual basis. Okay, so 14-12, the answer is A. Next, 14-13, we have 4 questions. And number 1 is, under accrual, what's the amount of gross sales? So you have now your gross sales being, first we begin with accounts receivable at the end for 1,350,000. Then we add accounts written off for 100,000. Sales returns, that's 2.5 million minus 50,000. 2.5 million minus 250,000. The difference, no? For your sales returns. Okay? At 250,000 minus 50,000. Okay. Repeat your sales returns. 250,000. 250,000 minus 50,000. So the sales returns of 200,000. Then we have the cash receipts from customers of 8 million. And finally, we have sales discounts of 500,000. So these are the figures that we are going to consider what is now the total. Okay, so the total is 10,150,000. We deduct accounts receivable beginning of 1.2 million. The difference is 8,950,000, your gross sales. From the gross sales, we deduct sales returns of 250,000 and discounts of 500,000. We now get your net sales of 8.2 million. 8,200,000. That is your net sales under the accrual basis. So in other words, our net sales was computed for sales on account, giving us the net sales of 8.2 million. Under accrual, what's the amount of net sales? The number one requirement is, under accrual, what's the amount of gross sales? So number one answer is B as in boy. Number two is B as in boy maghihapon. 3. Under accrual, what's the amount of gross purchases? So your gross purchases, we begin with accounts payable December 31, 2020, 1,850,000. We are going to add purchase returns, 400,000 minus 100,000 or 300,000. Payments to trade creditors for 5 million add, and then we add purchase discounts, 200,000. And deduct accounts payable December 31, 2019 for 1,500,000. The difference is your gross purchases, 5,850,000, and that is letter A. Number 4, under accrual, what's the amount of net purchases? Gross purchases, 5,850,000. We deduct purchase returns of 400,000 and purchase discounts of 200,000. Your net purchases amounted to 5,250,000. That's now the amount of net purchases. Okay, we go to problem 14-14. 14-14 for the requirement. Again, we have two requirements. Under accrual basis, what is the amount of gross sales for the current year? Now we begin with accounts receivable on December 31, 250,000. We add notes receivable December 31 gihapon, 150,000, and add collections of accounts receivable net of discounts, 1,800,000, and sales discount of 40,000, and collections of notes receivable of 80,000. The total is 2,320,000. Deduct accounts receivable on January 1 for 300,000. Notes receivable on January 1, 100,000, giving us sales of 1,920,000. That is account sales or sales on account. Then we add cash sales of 500,000, giving us the gross sales for the current year of 2,420,000. That includes cash sales and sales on account. So letter A for number 1. Number 2, under accrual basis, what is the amount of gross purchases for the current year? Accounts payable December 31, 120,000. Notes payable trade balance December 31 is 200,000 minus the bank loan of 100,000. So the notes payable trade is only 100,000. The payment of accounts payable is 1.5 million, purchase discount of 20,000, and payment of notes of 400,000. For a total of 2,140,000. And accounts payable January 1 deduct 160,000, and notes payable January 1 deduct 150,000. So our purchases on account is 1,830,000. Then we add purchases on cash for 130,000. The total or your gross purchases, which includes on account and on cash, is a 1,960,000 for requirement number 2 of 1414. Next, number 15. What amount should be reported as prepaid royalties at year end? Paid royalties January 1, 650,000. We add adjustments on December 31 for 250,000. So we add and get a total of 900,000. Prepaid royalties on December 31. That's letter D as in dog. In number 16, the problem is asking for what amount should be reported as prepaid expenses. Prepaid insurance, that's for 32,000, good for the year, made on July 1, 2020. So for 6 months, we have 32,000 times 6 over 12. That is up to December 31. So the amount of prepaid insurance is 16,000. Prepaid rent is for 20,000. Advance rental payment. So the total now is the total of the prepaid expenses of 36,000. Letter B as in boy. Number 17, what amount should be reported for prepaid insurance on March 31, 2020? Prepaid insurance, March 31, 2020 is equal to 72,000 times 35 over 36. 35 over 36. The company paid 72,000 to renew the insurance policy for 3 years on March 1, 2020. On March 31, 2020, The unadjusted trial balance showed 3,000 for prepaid insurance and 72,000 for insurance expense. What amount should be reported for prepaid insurance? So actually it's good for 3 years. Expired is only 1 month. So the remainder is still 35 months for the prepaid portion. The expired portion is only good for 1 month. So actually, you have prepaid of letter A, 70,000. What amount should be reported for insurance expense for the 3 months ended March 31, 2020? We have now the insurance expense per book of 72,000. Prepaid insurance before adjustment is 3,000. The total is 75,000. Prepaid on March 31 is 70,000. So the insurance expense for 3 months is 5,000. That is letter A. Problem 18. On July 1, 2020, Roxy Company obtained fire insurance at an annual premium of 72,000, payable on July 1 of each year. The first premium payment was made on July 1, 2020. On October 1, 2020, the entity paid 24,000 for real estate taxes to cover the period ending September 30, 2021. So good for the year. On December 31, 2020, what amount should be reported as prepaid expenses? So the prepaid insurance is 72,000 times 6/12. So from July to December, the prepaid portion, the expired portion is the same. So the prepaid portion is 36,000. For prepaid taxes, 24,000 times 9/12. October 1 lang. So the prepaid portion is still 9 months. So that makes 18,000. The total prepaid expense is 54,000. That's letter B as in boy. Next, number 19, required on the December 31 statement of financial position included the following information. What amount of interest expense should be reported in the income statement for the current year? The interest paid is 100,000. Then we add prepaid interest beginning or 2019 for 23,500. Then we add interest payable in for 53,500. The total is 107,000. We deduct prepaid interest end of 18,000 and interest payable beginning of 45,000. The total is 63,000. The interest expense is 114,000. That is letter D as in dog. Okay, number 20. What amount should be reported as advertising expense for the year ended December 31, 2020? The balance per book is 990,000 for advertising expense. Then we are going to add accrued radio advertisement on December 31. That's for 50,000. So the total is 1,040,000. Then we deduct prepaid newspaper advertisement, 60,000. The advertising expense for 2020 is 980,000. That's for number 20. Number 21, what amount should be reported for compensation expense for 2020? Compensation expense per book, 490,000. Then we add accrued salaries for 80,000 and accrued bonus, 175,000. So the total is 683,000, letter A. Number 22, what amount should be reported for professional fees expense for the year ended December 31, 2020? Balance per book for 820,000. Then we add accrued legal fees for November, 60,000. For December, 70,000. Total 130,000. Add to the balance per book, adjusted balance is 950,000. B as in boy. Next, number 23. Under accrual basis, what amount should be reported as royalty expense for 2020? Royalties paid, 3 million. Prepaid royalties for beginning, 550,000. Prepaid royalties and DIDA, 450,000. Then we are going to deduct royalties expense. Here, we have 750,000 and 800,000 for royalties payable. Royalties payable, 800,000 for beginning. And we have royalties payable for ending is 750,000. So 3 million, add 550,000, deduct 450,000, add 750,000, and deduct 800,000. The balance is 3,050,000. That's the answer in boy. Number 24, what amount should be reported as accrued salaries payable on December 31? Accrued salaries payable January 1, 400,000. Salaries expense, 4,200,000. Total of 4,600,000. Then we deduct salaries paid during the year of 3,900,000. Accrued salaries on December 31 is 700,000. So letter C. Number 25. What is the adjusting entry for supplies expense at year end? If we have our supplies inventory in January 1, that's 360,000. Then we have the payment of supplies. Okay? The payment of supplies amounting to 1 million and stated that it was debited to supplies inventory. So the total is 1,360,000. We deduct supplies inventory on December 31 of 600,000. So your supplies expense is 760,000 debit to supplies expense and credit supplies inventory. We have letter A. Number 26, what's the amount of the adjusting entry for accrued wages payable at year end? Wages payable January 1, 100,000. Wages expense that we have to add 1.1 million. And the total is 1.2 million. Deduct payments during the year of 950,000. The wages payable is for 250,000. Accrued wages at year end. So letter A. For number 26. Number 27. Under accrual basis, what amount of rental revenue should be reported for the current year? First, we have the cash received from tenants of 8 million. Rentals receivable 2020, 1,240,000. We have unearned rentals 3,200,000. And we have your rent written off of 500,000. The total is 12,940,000. We have to deduct 960,000. That's your rental receivable 2019 for 960,000 and unearned rentals for 2,400,000. That's your ending unearned rentals. So we have now the total of 3,360,000 with a balance of 9,580,000. That's now your rental revenue. For number 27, it's letter B as in boy. We now go to number 28. Under accrual basis, what amount should be reported as royalty revenue for the current year? So we have the royalties received, 2,500,000. The royalties receivable for 2020 is 800,000. Unearned royalties 2019 is 450,000. We get the total of 3,750,000. Then deduct royalties receivable for 2019 for 750,000 and unearned royalties for 2020. So we have now the balance of 2,350,000 is letter C. Now take note that with regards to royalties received, if you are adding 2020, you are deducting 2019, which is the reverse of the treatment of unearned royalties. For unearned royalties, you are adding 2019 and you are deducting 2020. Just take into consideration that received and unearned are reverse. They have reverse treatments. All right, we have all these problems. Let's finally take up the theory of 14, chapter 14, 14, 32, and 33. Now, let me give you the letter answers. In 1432, number 1 is A, number 2, B as in boy, number 3, D as in dog, 4, D as in dog, 5, C, 6, boy, 7A, 8A, 9C, and 10, B as in boy. 14-33, number 1, B as in boy, number 2, B as in boy, number 3, B as in boy, 4A, and 5, B as in boy. Okay, so these are the multiple choice problems that are found in chapter 14 as in connection with cash and accrual basis of accounting. Now the next chapter, which is chapter 15, is single entry, and this relates to cash and accrual basis of accounting. The very heart of the accounting process is the analysis of the dual effect of each transaction on the basic accounting model. Assets equals liabilities plus capital. All transactions are normally analyzed and recorded in terms of debits and credits. This system is called the double entry system of bookkeeping, which you are familiar with because since your first accounting subject, you involve transactions and finally you discuss the debits and the credits. A system of record keeping in which transactions are not analyzed and recorded in the double entry framework is called a single entry. Where the records are incomplete, they are said to be maintained on a single entry basis. In other words, you are not following the debit and the credit, no? For every transaction, normally we say that for every debit, we have a corresponding credit. But it's not true for single entry system because in single entry, we just consider or just list down, like for example, sales. We just list down sales without a corresponding debit and credit. Okay, so under the single entry system, the records maintained are represented by what we call bare essentials. And normally the records include a record of cash, accounts receivable, payable, property, plant, and equipment, and taxes paid. The major record under the single entry system is the cash book, and it's maintained showing all receipts and disbursements. So in the cash book, you merely list down all your receipts and disbursements in a single column. And because in a single entry, no specific accounts for the receipts and disbursements are debited or credited, only a description thereof is made. With respect to accounts receivable and payable, only a list of customers and creditors is made with their corresponding balances. Of course, in double entry, we still maintain our subsidiary ledgers in order to support the general ledger, which is not true in the case of single entry. Because in single entry, you merely have a list of your debtors and your creditors. Now, with the single entry method, the computation followed in determining net income or loss is simply to compare the capital or retained earnings at the beginning of the year and capital or retained earnings at the end of the same year after taking into consideration withdrawals or dividends and additional investments. So whatever is the balancing figure, that's your net income or loss. The difference is either net income or net loss. Any increase in capital or retained earnings is net income. Any decrease is net loss. The single entry method of determining net income or loss is known as net asset approach or the capital maintenance approach. So we have now the formula for a proprietorship, single proprietorship or partnership. We have the capital at the end of the year, then we add withdrawal, total, we deduct capital at the beginning of the year, and we deduct whatever additional investments. So the difference is net income if the upper total exceeds the lower total. Then for corporation, we have retained earnings and we add dividends declared or paid and other items that decrease retained earnings but not profit or loss. So we have now the total, retained earnings beginning, and other items that increase retained earnings, but not profit or loss. But not profit or loss, meaning it's not income or loss. Because the balancing figure now is net income or loss. So for the preparation of the income statements involving the computation of individual revenue and expenses balance by reference to the cash receipts and disbursements and the changes in assets and liabilities. The formula used in converting cash basis to accrual basis are useful in this case, including the formula for sales, purchases, income other than sales, and expenses in general. As I have mentioned earlier, that chapters 14 and 15 are related. The preparation of the statement of financial position involves inventorying, counting, and verifying procedures to determine the nature and amount of most of the assets and the liabilities. Okay, so we now go to the problems in chapter 15. I hope we can do this in a total of 2 hours. Okay. Now, will you begin with the straight problem? Let's begin with one straight problem and then go to the multiple choice problems, including the theory portion. 15-15, okay. Now, the company prepared the following comparative statement of financial position on December 31, 2020. So you have now the ending balances and the beginning balances for assets, liabilities, and equity. So you now get the totals. And at the bottom, you have your cash receipts and your cash disbursements for a total of 4,490,000 for the receipts and 4,070,000 for the disbursements. Determine the net income or the net loss using the single entry method of and prepare an income statement. Okay, so we now begin with the determination of net income. If we have to follow the formula in computing net income for a corporation, so we have now the first computation will be your retained earnings December 31. We have the amount of 600,000, which you can find in the December 31 column. So retained earnings December 31, 600,000. And then we add dividends. You can find dividends among the disbursements, dividends of 400,000. Dividends of 400,000. So we add retained earnings and dividends, total is 1 million. We deduct retained earnings beginning, that's found on the January 1 column. So the balance is 500,000. That is our net income. We will prove later on by preparing an income statement if our net income figure is correct or not. Okay, now let's try to determine your specific accounts. First, we have to determine sales. So what is now the amount of sales. First, we have notes receivable end for 210,000. We add accounts receivable end for 950,000. We add collections of notes and accounts, which you can find among the cash receipts. So collections amounted to 2,950,000. We also add notes receivable discounted with a face value of 200,000, which we credit to notes receivable. So the total now of our amounts to be added, 210,000, 950,000, 2,950,000, and 200,000 is 4,310,000. This is the total of the positive items. Then we deduct notes receivable beginning 200,000, accounts receivable beginning of 740,000. The total is 940,000. And deduct this amount from 4,310,000, giving the amount of 3,370,000. That is the sales on account. So sales on account is 3,370,000. Okay, so we can determine the loss on notes receivable discounted. We have the face value of 200,000, but it was discounted only for proceeds of 190,000. So actually, there is a loss on notes receivable discounted amounting to 10,000. Then we have to determine the accrued interest on notes payable. Accrued interest on notes payable. We have the notes payable here given at the amount of the beginning notes payable. How much is the beginning balance? If we have now our accrued interest on the notes issued to bank, so which of these data? 12% note issued to bank on March 1, 2020, that's for 300,000. So 300,000 we multiply by the interest rate of 12% times 10 over 12, counting from March 1 to December 31. So accrued interest expense on notes payable issued to bank on March 1, 2020, the accrued interest payable is computed by multiplying 300,000 by 12% by 10 over 12. So the accrued interest on notes payable is 30,000. Okay? Next, we have to determine the investment sold. The investment here, we have the proceeds of 250,000. We have 250,000. That is the sale of investment. Now you will notice that it is found among the receipts, no? It is found among the receipts. And the cost of the investment in the assets or among the assets, you can find investments initially for 400,000, but the ending balance is 100,000 only. So there is a decrease by 300,000, representing the cost of the investment sold. So if the cost, the investment sold is 300,000 and the proceeds is only 250,000, in other words, there is a loss on the sale of the investment by 50,000. Repeat, the cost of the investment sold is 300,000. That is the difference between the beginning and the ending balances. So the 300,000 cost of the investment sold, the proceeds is only 250,000. In other words, there is a loss of 50,000 on the sale of the investment. Okay, so just take note of these items. We will be presenting them in our corresponding statements. So loss on notes receivable discounted, 10,000, accrued interest expense, 30,000. Then we have the loss on the sale of investment for 50,000. Next, we have to determine our purchases. The pair of your sales is accounts receivable. The pair of your purchases is accounts payable. Ang imo gali nga sales, ang iyang pares, accounts and trade notes receivable. Ang imo nga sales. Ang purchases, ang iyang pares, notes, payable trade, and accounts payable. So we have our notes payable on December 31. The amount is stated as 580,000. But from this, we have to deduct the notes payable to the bank because this is non-trade. So we have to deduct. Therefore, the notes payable trade is only 280,000. The notes payable trade, 280,000. Then, accounts payable, December 31, 750,000. Payments of notes and accounts given among the cash disbursements given is 2,100,000. So we are now going to add the three amounts, 280,000, 750,000, and 2,100,000. The total is 3,130,000. Notes payable on January 1, 750,000, and notes payable, accounts payable, January 1 is 600,000. The total 750,000 and 600,000 is 1,350,000. Deduct this from 3,130,000. The difference is 1,780,000. 1,780,000. That is now your amount of purchases on account. So we now have our sales, 3,370,000, purchases, 1,780,000. Next, we go to equipment. The equipment balance by January 1 is 1 million net. Then we add acquisitions. You can find among the disbursements, equipment disbursed, meaning you bought for 280,000. The total of the equipment account is 1,280,000. Then the equipment balance at the end of the year is 1,200,000, giving the difference of 80,000. That is the amount for depreciation expense. Okay? Then also, let's continue with the expenses paid. Given among the disbursements is your amount of expenses paid, 790,000. Then we add prepaid on January 1 for 120,000 and accrued on December 31. Your accrued expense of how much? 50,000. Earlier, I mentioned that if prepaid beginning is added, accrued end is the one added. And then you deduct prepaid end and accrued beginning, considering that one is an asset, the other one is a liability. Okay, so I'll go back. Expenses paid 790,000 at prepaid January 1, 120,000, accrued December 31, 50,000. The total is 960,000. Then we deduct prepaid on December 31 is 100,000 and accrued on January 1 is 40,000. So 960,000 minus 140,000. The difference is 820,000. That is your amount of expenses other than depreciation, interest expense, and the losses. Okay, so we are now ready to proceed to the requirement of preparing an income statement. So we have now the income statement of Corolla Company for the year ended December 31, 2020. First, we deduct sales, 3,370,000. Now, what we have learned about notes, this time you can apply it by stating sales. Then you can write note number 1 so that in your computation for sales, you write the heading note number 1. Sales from note number 1, 3,370,000. Then inventory on January 1, taken from the January 1 column, 1,600,000. Okay, then you add purchases. Again, you have to indicate note number 2 and write note number 2 at the top of your computations. The total goods available for sale is 3,380,000, and then we deduct inventory on December 31 for 1,500,000. So we now get the difference of 1,880,000. The difference between sales of 3,370,000 and cost of goods sold of 1,880,000 is the gross income of 1,490,000. From the gross income, we are going to deduct the following expenses. So you can use note number 3 for this. Note number 3 at the top of your computations. So your expenses, the amount of expenses is 820,000. Plus depreciation, you can use note number 4 for depreciation of 80,000. And then we have the loss on the sale of the investment. Anyway, you can write note number 5 for that, for 50,000. And loss on notes receivable discounted, note number 6, for the amount of 10,000. And finally, interest expense, though you can use note number 7 for that. Okay? So out of this, we have the total of the expenses of 990,000. Deduct it from the gross income of 1,490,000, giving us the final net income of 500,000. So now you have proven that your computation of net income above the first computation we made, the net income we have finally proven is correct to be 500,000. Okay, that's your net income. As I have stated, if you have any questions, you can just write them down and you can ask me on Thursday, okay? Or yes, tomorrow you will be using the YouTube, no? To you, my today is already your tomorrow, because after this we have the recording, and maybe it will take about 1.5 hours to have this finally recorded and transferred to the YouTube. So my today is your tomorrow. It's just like me holding a class because of the technicalities involved. It's also time consuming. The only benefit on my part is I will be stating the solutions once. But with regards to technicalities, it will require a long time also. Okay, we go to the multiple choice problems and questions. Let's take up all of this up to 15-13, and then we have the multiple choice theory for here, only problems. Okay, so we now go to 15-1. What was the net income for the current year? The net income is to be computed, and it's equal to 750,000. Retained earnings end is 1.5 million. We will compute it above. Retained earnings and 1.5 million. Then we add the dividends paid of 250,000. The total is 1,750,000. Then we deduct retained earnings beginning or January 1 of 1 million. So the balance is 750,000. That's your net income for the current year. As given, the total asset shown is 5 million, total liabilities 2 million, contributed capital is 2 million. So based on 5 million minus 2 million and minus 2 million, your retained earnings beginning is 1 million. So if you really would like to have a support for 1 million, you can again use notes. Note 1. Okay? So during the current year, the entity issued share capital of 500,000 par value at a premium of 300,000. Dividend of 250,000 was paid on December 31, 2020. The statement of financial position on December 31, 2020 showed total assets of 7.5 million and total liabilities of 3.2 million. So total assets, so 7.5 million, total liabilities of 3.2 million, meaning the equity is 4.3 million. So we finally compute total assets on January 1, 5 million, total liabilities and contributed capital, 4 million, retained earnings on January 1 is 1 million. Next, at year end, total assets on December 31, 7.5 million. We deduct total liabilities of 3.2 million and total contributed capital of 2.8 million. 2.8 million, we have total contributed capital beginning of 2 million, and then we are going to add 500,000 and 300,000. 500,000 and 300,000. The issuance of shares. 500,000 par value and the premium of 300,000. So the total is 2,800,000 for the total of 6 million. So your retained earnings at the end is 1.5 million. You have now used 1.5 million retained earnings. December 31, we add dividends paid, 250,000, and the total deduct retained earnings January 1, net income is 750,000. We use the workback process. So number 1C. Number 2, what was the net income for the current year? Okay, the net income for the current year is 3,250,000. That's letter A. So how do we compute for this? Increase in share capital, 5,750,000 minus the beginning balance of 5 million. So we have 750,000. Increase in share premium, 1.5 million minus 1 million or 500,000. And we have now your total of 1,250,000 increase. Retained earnings at the end, 4.5 million. And we have now your increase in shares for 1,250,000 as computed above. Then we have the cash dividend of 1 million given. The total is 6,750,000. Then we deduct the retained earnings beginning of 3,500,000. The balancing figure is the net income. So you get letter A. Then for 15-3, what is the retained earnings balance on January 1, 2020? Retained earnings balance, that will be your balancing figure, ang beginning balance. So what we are going to do is, we just fill in the given figures and then work down and finally work back. The prior period adjustment, the overstatement of the 2019 inventory. So the overstatement is in the amount of 200,000. we have to deduct it from the retained earnings beginning. In other words, it is an adjustment to retained earnings beginning. We have to deduct it from retained earnings beginning. So the corrected balance of retained earnings beginning should be computed. Then we add net income given at 700,000. And we have to deduct the dividends declared of 400,000. And the final amount of retained earnings is 1 million, which is the difference here in the shareholders' equity of 4 million at year end, and we have the share capital unchanged of 3 million. In other words, the increase in retained earnings is 1 million. Increase in retained earnings, or your retained earnings December 31. That's now the increase in your stockholders or shareholders equity. Retained earnings on December 31 is 1 million. We work back. We add dividends declared of 400,000. So we get the total of 1,400,000. Deduct net income of 700,000. The difference is 700,000. That's the corrected balance of retained earnings beginning. And we have to deduct 200,000 as a prior period adjustment. Since we are deducting, working back means that we have to add 700,000 and 200,000. So your retained earnings beginning is a squeeze figure, or that is your balancing figure. The amount of 900,000. That's your retained earnings beginning. The answer in number 3 is B as in boy. Number 4, what is the retained earnings balance on January 1 for January 1, 2020? Okay, so again, we begin with retained earnings on December 31 is 1,700,000. That's your retained earnings on December 31, 1,700,000. Then we have dividends declared of 600,000. We have your prior period error for 2019 error. We have an over depreciation of 100,000. And our net income is given at 800,000. So again, our retained earnings on January 1 will be a squeeze figure. How do we find the retained earnings at the end? The total shareholders' equity on December 31 is 5 million. Share capital is 3 million, remaining unchanged. And we have the share premium in the amount of 300,000. The share premium, gain on sale of treasury stocks. So we have now your 300,000. I'll repeat, stockholders' equity, shareholders' equity, December 31, 5 million. Share capital beginning 3 million. Add share premium from treasury stock 300,000. Adding 3 million and 300,000 is 3,300,000. The ending balance is 5 million. So the difference is 1,700,000 for your retained earnings at the end. So retained earnings at the end is 1,700,000. Now we have to work back to determine retained earnings beginning. Retained earnings end 1,700,000. We add dividends declared 600,000. So we get 2,300,000. And deduct the sum of net income of 800,000 and the prior period error of 100,000. So from 2,300,000, we deduct 900,000. The difference is retained earnings on January 1, which is 1,400,000. That is your balancing figure by working back. Okay? So we have now 15-4. We go to 15-5. What was the net income for the current year? Net income for the current year. Increase in assets, 8.9 million. Increase in liabilities, 2.7 million. Net increase is 6.2 million. We add dividends of 1.3 million. The total is 7.5 million. The increase in capital, share capital 6 million, share premium 600,000. So the total is 6,600,000. Deduct from 7.5 million. The difference is 900,000. That is your net income. 900,000, that is your net income. So letter C. Next, number 6. What was the net income for the current year? Net increase in net assets, 1,750,000. Net increase in net assets. Then we add dividends paid, 1,500,000. The total is 3,250,000. Increase in share capital, deduct 700,000. Increase in share premium, deduct 300,000. And deduct the effect of the error for 250,000. Here it's given. So the prior period error from understatement of ending inventory, which we have to deduct. So the difference is the net income of 2 million. Okay, I'll repeat the breakdown. Net increase in net assets, 1,750,000. We add dividends paid, 1,500,000. The total is 3,250,000. Increase in share capital, 700,000 deduct, and increase in share premium, 300,000 deduct, and error deduct, 250,000. So your net income is 2 million. That's letter A for number 6. Okay, we go to number 7. Question, what was the net income or loss for the year? Increase in assets, 200,000. Increase in liabilities, 1 million minus 840,000. So you have now the difference of 160,000. That is the increase in liabilities. Increase in assets, 200,000. Increase in liabilities, 160,000. The net increase in equity is 40,000. Share capital issued in excess of dividend is 240,000. So we have the difference of 200,000. The share capital issued in excess of dividends, 240,000 is negative, positive 40,000. So we have a net loss in the amount of 200,000. That is letter C. Next, number 8. What was the net income for the year? Okay, we have the following effects on equity. Increase in cash, 800,000. Increase in accounts receivable, 250,000. Increase in inventory, 1,250,000. Now, these are all positive items. Decrease in investments, 500,000 deduct. Decrease in accounts payable is positive. Kaya nga, liabilities. So, add 400,000. Increase in bonds payable, negative, 900,000. And we have the net increase in equity for 1,300,000. We add back dividends declared, 300,000. The total is 1,600,000. We have the increase in share capital for 1 million, and we have the increase in share premium for 100,000. So the total is 1,100,000. The difference is 500,000. That is your net income. Increase in share capital, 1 million. Increase in share premium, 100,000. So the total of the two is 1,100,000. We deduct it from the net increase in equity of 1.3 million and dividends declared of 300,000. So we have the total of 1,600,000 minus 1,100,000. The difference is net income, letter C. Next, number 9. Okay, this will be the last multiple choice that I will give a breakdown. So from number 10, 11, 12, 13, okay, I will just give you the letter answer. So number 10, 11, 12, and 13, I will just give you the letter answer. If you have any questions on the solution, again, you can ask me on Thursday. So for number 9, what was the net income for the current year? So we have now the effects on equity, increase in cash, increase in accounts receivable, and increase in inventory. These are all positive effects on equity. Decrease in investment, negative. Increase in equipment, positive. Okay, then we have decrease in accounts payable, positive. Increase in bonds payable, 2 million, negative. Increase in bank loan payable for the amount of 3 million. Again, this negative. Increase in accrued interest payable, 300,000, negative. So the net increase in equity is 6,400,000. We add back the dividends paid of 4,500,000. So we have the total of 10,900,000. Then we deduct increase in share capital for 100,000 times 30, that's 3 million. And increase in donated capital, 2 million. The total of 5 million deduct from 10,900,000. The net income is 5,900,000. Letter C. Okay? So 15-10, the answer is D as in do. 15-11, B as in boy. 15-12A and 15-13, requirement number 1 boy, requirement number 2 boy, requirement number 3A, and requirement number 4, B as in boy. Okay, that ends my giving the solutions to the problems in chapters 14 and 15. So let's meet on Thursday. Whatever questions you have, I'm going to entertain before I'll proceed to chapter 16, which is correction of errors. Okay? Take note, we still have 8 chapters left. 16, 17, 18, 19, 20. Yes, 8 chapters. Hopefully, to be finished before the final exams. Okay? So, God bless everyone. And I hope you will see and learn, no? In the YouTube for tomorrow. Okay? So God bless. Okay. Tapos na. I-off na.